Hello and welcome back for another edition of London Direct. Earnings season is back underway, so what can we expect stateside and also here in Europe? Well, I've been to ETX Capital to find out. So the S&P have really shaken things up. The FX implications are obvious. What does it mean for the equities?
Well, I think we've got a bit of a twofold problem here. I think while now that the S&P have lowered interest rates, we could see traders start unwinding positions and going into equities. I think the big problem here is that pension funds and investment banks have usually gone into the bond market to reap rewards, but because interest rates are so low, bonds aren't yielding anything anymore. So a lot of these guys are looking to go into the equity market to reap rewards. Now that interest rates have been lowered, this could be good for exports and also imports back and forth out of Switzerland. It's going to be a very interesting time.
Yeah, what's your overall assessment of the way things are in the markets? It seems to be a very bearish tone at the moment, concerns about the oil price, global growth, the World Bank again downgraded growth. What's driving sentiment at the moment?
Well, I think it's a couple of things. First of all, it's economic data. You know, we're seeing the negative CPI data come out of the Eurozone, suggesting that it's slipping into deflation. But however, from the other side of the pond in the States, you know, Janet Yellen came out a few weeks ago and said that low oil prices are going to be good for the economy. So I also think that's going to drive sentiment. I mean, don't get me wrong, it's not going to be great for resource stocks, and it certainly isn't going to be great for the miners. But then we look at the companies that are exposed to crude oil in a positive way. So, for example, like the airliners, the travel companies like Carnival, you know, we could see a real rally in their share price off the back of low oil prices.
Yeah, we've also seen earnings season kick off in the States. It's that time of year again. Is it a case that we're going to see the US equities strongly outperform their European peers, because obviously the growth is more robust in the States?
I think that's a very interesting question. I think we may do with the miners, for example. I mean, you look at Alcoa, who put their results out on Tuesday, I believe. You know, they were better expected. I mean, don't get me wrong, they're heavily exposed to aluminium rather than you know, copper or gold or oil. But it'll be interesting to see what the UK miners produce. It'll be interesting to see when the UK miners do produce their results, to see how that would affect their share price.
And to focus on Europe and the FTSE stocks, what do you think are going to be the major themes over here?
I think the major themes that people are going to be looking at this quarter four reporting season is the miners and the banks. The miners, because the resource stocks in general, because of the collapse in commodity prices, especially which we saw with copper yesterday. I mean, you look at the miners yesterday, they were all down anywhere between sort of 5 and 20%, and you look at someone like Rio Tinto, BHP Billiton falling 6%. That's a big move. We've also got to look at the banks in this reporting season as well. With the global growth problems that we're getting in China, Japan and Europe, the first pillars that fall in these situations are the banks. You know, so we see that with the bad loans that we saw last year, we see with the PPI, we see with the LIBOR scandals. You know, I think this is going to hit the share prices of the banks very hard this quarter four reporting season, especially those that have exposure to the Far East.
Well, that's all for the moment. Stay tuned for more interviews from Dukas Copy TV, but for now, goodbye.